Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.25% today. We had no change in our signals, both green on our stock market, fast and slow triggers. We still have not moved into the market yet. We're still waiting and seeing how this is going to play out. We did have a change on the bond market signal. We went from yellow, green to both of them being green. And we did make a change today to the bond market portion of the portfolio. What you're seeing right now is that the bond market is going up in value, which usually means, yields are going to come down. But one of the reasons is because there's some fear of recession that's coming and people will move to bonds as kind of a flight to quality. And there's also, of course, if it actually does happen as a recession, sometimes the Federal Reserve needs to lower rates in that environment. The projection is that they will be lowering rates this year if you look at the market. And so that's usually a good thing for the value of bonds also. They go up in those environments. So, it's very interesting today. As you recall from this week, we heard about the factory slowdown that's happening. We heard about the fact that there's less job openings than there was, less than 10 million job openings. And then today we heard about the service industry report, which showed some slowdown also, did worse than expected. Still growing, but not as much as was expected. So the market's starting to look at the possibility of recession. We're seeing kind of the inverted yield curve between the 3-month and the 10-year, getting even further inverted as far as that goes, which is a fairly strong predictor of recession. If we have one, it would be, probably in the second half of the year. The big question, of course, is, what's it going to be like? Is this a soft landing or hard landing? Right now things are okay. Even though things are slowing down, that's okay. That needs to happen to kind of bring inflation back down. But there's still plenty of pent up demand and spending going on that seems to be driving things. So maybe we end up with a soft landing. But the fear is, and the thing that the market's looking at, quite heavily, is that the rates have already increased so much. Now with this banking crisis happening, that's sort of like another rate increase because banks might not be lending as much money. And so this is the thing that's going to play out here, specifically be playing out through the earnings reports. So we're going to start to get more and more of the first quarter earnings reports now. I don't think we're going to see anything massively, bad in the earnings reports right now. Maybe some of the forward guidance will be a little bit on the negative side. But I think if we're going to see some problems, it would come with the next quarterly earning reports because it just sort of takes some time for some of these things to come through and really create some problems. But interesting to see how this plays out and look forward to seeing you tomorrow. We'll see what happens then. Thank you.